Google, Microsoft, Apple. Do you want to own these dream companies? As resident Indians, we always had costly options when it comes to investing in the USA market. But wait, things have changed. I've found a great deal for you guys. Let's get into the video. Before we proceed, let's look at some options that are available for us to invest in the USA market. To buy individual stocks, there are options like Vested, HDFC, Saxo, etc. When it comes to mutual fund, we have funds like Parak Parik Long-Term Equity Fund. It is a multi-cap fund with more than 30% international exposure. Remaining 70% of stocks are invested in Indian equity. Some interesting stocks in this mutual fund are Amazon, Google, Facebook, Suzuki, etc. Return on the investment is not that great. Also, due to this disease, the fund faces some negative returns recently. But this fund is a good option if you want foreign exposure and Indian exposure in the same fund. You can look at the rank, it is performing quite well and it is a well-designed fund. Let me know in the comments if you would like me to make an in-depth video about this fund. Next up, there's a fund that's more famous, ICICI Prudential US Blue Chip Equity Fund. This fund has good returns and is 100% invested in the USA market. And it also has many interesting stocks. But the issue with these funds, which you might have noticed, they are actively managed and the stock performance solely depends on the fund manager's ability. Also, you have to pay a fee every year for his service regardless of how the fund performs. The expense ratio is more than 1.5% in these funds. Hands down, index funds are always better than mutual funds. You don't have to listen to me. Hear from the master.
The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund.
As he says, index funds are best for buy and hold strategy. And the data proves that as well. So always go for index funds. Now, let's look at the deal which I want to share with you guys. All along, it was not possible for us to invest in the US passive funds. But recently, a new fund was launched in April 2020. It's called Motilal Oswal S&P 500 Index Fund. What are the advantages of investing in this fund? S&P 500 has been around for over 63 years, so it has a very long track record. Generally, the companies in this fund have awesome balance sheets. Take Google for example. It is sitting in around $120 billion of cash. So having an opportunity to invest in this fund is a great choice for us. It has very low correlation with the Indian equity market. When we combine assets that are less correlated, it helps us to reduce portfolio volatility. So this fund is a great way to diversify. It can be used to hedge. What is hedge? Hedge is nothing but protection against financial loss. US dollar has gone from 40 rupees to 80 rupees. So when INR depreciates, Indian investors' return in Indian rupees will be higher than the returns in USD. S&P 500 in USD grew 3 times, S&P 500 in INR grew 5 times in the last 10 years. These values and the fancy returns they show here are past data. Past data doesn't really matter much because there is no guarantee that we will get the same return. Also keep in mind, INR may appreciate as well. Global exposure in terms of sale, higher dividend yield are major advantages as well. Now coming to the disadvantage. The first disadvantage would be it is subjected to debt tax. If you are investing in Indian equity funds, you will be paying LTCG or STCG. But here, since you are investing in foreign equities, it is subjected to debt tax. So what is debt tax? If you sell the units before 3 years, you have to pay tax according to your tax slab. But if you hold on to it for more than 3 years, you only have to pay 20% tax with indexation benefit. Indexation is nothing but taking inflation into account, so you will end up paying less tax. In my opinion, if you are going to sell within 3 years, please do not put money in this fund. The other disadvantage is this fund does not declare dividends. It is reinvested back into the fund. This is okay, but there is a withholding tax of 30 to 40% on all the dividends you earn. This is high, but we can't do anything about it. Let's look at the cost. There is no entry load. That is good. But it has an exit load if you redeem it within 3 months from allotment date. If you redeem after 3 months, there is no exit load. Expense ratio is 0.5% for direct plan and 1% for regular plan. No, don't ever invest in regular plan. Generally, 0.5% is quite high for passive funds, but since we are investing in the US market from India, this sounds reasonable to me. They call it an open-ended scheme, but here is something to take note of. As part of SEBI mutual fund regulation, the overall limit for investing in foreign securities by the mutual fund industry is USD 7 billion. This fund is permitted to invest USD 300 million approximately. So when the asset under management reaches around 2100 crores, the subscriptions into the scheme will be suspended by AMC. So have a look at the AUM value now and then. So my thoughts about this fund. Due to the market crash, S&P 500 fell in March 20, but it bounced back strongly in May 20. This is purely because of the government support. Forward P/E ratio is around 21, so it's really in an overvalued situation. So what I would tell to my own brother or sister is that do not invest lump sum in this fund. Do SIP and be with this fund for at least 5 years. Don't miss this opportunity. And also I would ask you to give a considerable weightage to this fund. Don't just give 1% or 2% in your total portfolio and call it as an hedge. It's not a hedge. Give at least 30% weightage to your portfolio in order to truly reap the benefits which we discussed here. Start your SIP with Rs 500 and slowly increase the amount when there is a clear sign that there is no second crash, because disease is still spreading. Generally, USA is a strong market with strong government backing, so the government won't let the economy crash so easily. It's very hard to bet against the development of America, so take advantage by investing in this fund. This is the first time such a fund is launched in India. Maybe a few years down the road, something even better would be offered. When that comes along, I'll share that with you. But at this point in time, this is one of the best offerings out there in the market. Give a thumbs up if you enjoyed this video. Subscribe to this channel for more personal finance videos. Let's make education free.